Hi, I'm Steven, co-founder and CIO here at Quantamize, and you're watching the Quantamize Global Markets AM Preview.
Stocks are slipping this morning in early trading as investors await more news on U.S.-China trade negotiations. U.S. President Donald Trump is allegedly pressuring U.S. trade officials to reach a deal with their Chinese counterparts. Bloomberg suggests that the hope is that an end to the U.S.-China trade spat will fuel a continued rally in U.S. stocks. The Dow Jones Transport Index may be primed for a sharp rally after falling for 8 straight sessions. Since 1990, there have only been 9 losing streaks longer than the current one. The current daily decline of the Dow Jones Transport Index is the longest in 7.5 years. According to Investors Intelligence, newsletter writer optimism continues to edge up, now currently sitting at 52.9% versus 52.4% in the previous reading last week. The II reading has improved 9 straight weeks in a row, the longest streak since September to November of 1998. The domination of the FANG stocks in the current rally in U.S. stocks has been limited to start the year. This is in stark contrast to the 2017 rally in U.S. stocks, where Facebook, Amazon, Apple, Netflix, and Alphabet Google drove the overall U.S. stock market. While limited direction from the FANGs could be a worrisome trend, we believe it's actually healthier for U.S. stocks, since the current rally is less dependent on the performance of the 5 mega-cap tech consumer tech stocks. Taking a quick look at European markets this morning. While European stocks have been rallying to start the year, net flows into U.S.-listed European ETFs have been notably negative. Just as an example, the iShares Eurostoxx 50 ETF, ticker FEZ, has nearly lost 10% of its total assets to start the year. In options markets this morning, the VIX is little changed, currently sitting at 15.09, with General Electric out of the money puts, Eli Lilly out of the money calls and puts, and Ford out of the money calls, some of the most heavily traded options in the U.S. pre-market this morning. From our popular stocks trending in the news segment, Weibao reports a 62% jump in profit in 2018, delivering a $571.8 million in revenue, up 49% from a year ago. Weibao saw spending rise 50% in calendar year 2018, which made up 87% of Weibao's revenue. Weibao saw 462 million daily active users in December. General Electric CEO Larry Culp said yesterday that its power unit will continue to burn through cash in 2019, and the company will post a negative cash flow, a surprise to investors. General Electric's cash burn will be mainly from the power unit and other operational pressures. He added that deleveraging GE Capital is a key to reducing its risk profile. Culp highlighted that General Electric's turnaround is a multi-year effort, and the company must pay the piper in the ongoing revamp. Revlon shares are lower after Jeffrey highlights Nielsen data showing recent weak sales of its products. Nielsen shows a drop in sales of over 15% over the last 4 weeks. Jeffrey cites ongoing challenges for Revlon with the recent deceleration in the sales, chief among them.
If you found this video informative or helpful, subscribe to our YouTube channel or follow us on Twitter. And don't forget to check out Quantamize.com for your full market preview for stocks, options, ETFs, and cryptos, and to find out what trades our AI quant models like this morning.